Welcome back to Your Average Investor, the channel that looks at my journey through investment, budgeting and finance. As promised in the last video, today we're going to take a look at CFDs or contracts for difference, which can be traded on a number of different platforms. Personally, I steer well clear of CFDs. In my opinion, they're far too high risk and I have far too little understanding of them to really go out there and invest in them and trade in them properly and effectively. That said, there are lots and lots of people out there whose first experience in trading and investing is actually in CFDs. And I think the main reason for this is because it's so widely advertised on YouTube and other media platforms. The real risk for these people is losing all their capital because they don't fully understand what CFDs are, how they work, and how to predict what's coming in the future. I am by no means an expert in CFDs. I've never traded in them, and what I understand about them is through my own research and reading. The reason for this video today is to protect those beginner investors out there who see adverts on YouTube or Facebook or wherever they see them and step into the world of investing into CFDs, putting their capital at risk, at more risk than it needs to be. Let's hop onto Trading 212 then and look at their CFD platform within the app.
For those of you who've used the Trading 212 app before, you'll know that Trading 212 offer three branches of products. They offer their Invest account, which I currently invest through. They offer an ISA account, and they also offer the CFD product, which is what we're going to be talking about today. We all love the fact that Trading 212 offer fee and commission-free investing. However, Trading 212's product does have lots of different fees, commissions and charges attached to it. So if you did decide to trade through Trading 212 in the CFD space, it's important to fully understand the different fees that you will be subject to. A CFD or contract for difference is a financial derivative, meaning that you don't take ownership of the underlying asset. Instead, what you're doing is speculating or gambling on the rise and fall of prices. Now, this can take place across lots of different markets. As you can see on the screen, Trading 212 offer FX markets, so currency, different levels of indices, cryptos, which is probably one of the most widely publicised CFD markets, stocks. Trading 212 also offer categories for top winners and top losers, as well as a number of different other categories. As we've already said, when you're trading CFDs, you don't actually own the underlying asset. Instead, you're buying and selling contracts via different online providers. This contract is essentially an agreement that you will exchange the difference in price from the asset from the point at which the contract was opened to when it was closed. So how exactly does CFD trading work? Like you can see on screen, for each product there's a buy and a sell price. Buyers believe that the asset's value is likely to increase, whereas sellers believe that the asset's value is likely to fall. Now there's lots of different terminology in the CFD space which can make it quite complex. You've probably heard of long and short positions. Essentially a buy position, because the buy price is slightly higher than the market value price, this is known as a long position. Whereas the sell price is slightly below the market price and therefore this is known as a short position. As you can see on the screen, there's a difference between the buy and the sell price, and this is known as the spread. This spread is essentially what the provider takes to facilitate the position. So in essence, this is money that you lose just through buying the product. So now let's pretend that you buy or go long on the Bitcoin crypto CFD. Because you're buying in this instance, essentially what you're saying is that you expect the price to rise so that when you later sell, you'll make a profit. So if you did buy into Bitcoin and the value increased before you sold, you would make a profit. However, if you bought into the same product and the value decreased before you sold, you would obviously make the loss. On the other hand, if you decided to sell the product or go short, you would initially sell into Bitcoin. This is essentially saying that you expect the price of Bitcoin to fall. Therefore, by initially selling the product, if the price of Bitcoin fell before you closed a position or bought back into the market, you would make a profit. Whereas if the value of Bitcoin increased before you closed your position, you would lose money. So what is it that actually affects the value of these CFDs? Essentially, it's the same as with stocks and shares. When buyers outweigh sellers, obviously demand increases and therefore the price rises. Conversely, when sellers outweigh the buyers, the supply increases and the demand and price therefore drop. So that's the fairly simple part. If you buy, you're expecting the value to increase. If you're selling, you expect the value to decrease. Now, CFDs also offer something called leverage, which means that you can gain exposure to really large positions without having to commit the full cost at the outset. An example of this might be that you would only have to commit 20 or 25% of the cost when you're buying into a trade, and you would therefore pay the rest of the cost of this trade when you sold the position later. Now, if you do gain money from the trade, this is obviously not a problem. However, if the trade loses money, you obviously owe quite a lot back to the leverage. In essence, this leverage enables you to spread your capital further, but it's important that you remember that your profits and losses are calculated from the full position, not just the element that you've actually purchased yourself. What this means is that leverage enables you to make massive profits far beyond what you would normally be able to do with the bankroll for your trading. Now, with this positive also comes a negative, when losses can also be hugely magnified. Because of this, you can see how people can make lots and lots of money from CFDs, but you can also see the adverse side, whereas if you don't have a full understanding of what you're investing in or how it works, you can also lose a lot of money. Because of this, it's vitally important to do your due diligence before you decide to use the Trading 212 CFD platform. Now, I can completely see why people get into the trading CFDs. From just talking about it, I can really see how exciting it can be, and that release of adrenaline, dopamine and serotonin when you make a good trade and you make lots of money from it would be unbelievable, and that would get you hooked in. Now, from my point of view, this does sound a little bit like gambling, and if you don't have a full understanding of what you're investing in essence, it is just that, gambling. One of the most risky products you could invest in my opinion, is Bitcoin. As we all know, Bitcoin has some massive swings across its value, and if you got into a leveraged position buying just before the value decreased, you could be in a lot of trouble. If we take a look back to the Trading 212 platform, you can see there's lots of different FX markets you can trade. You can trade the euro to US dollar, Great British pound to US dollar. Most of them are derived from the US dollar in some way, shape or form. Obviously down towards the end you've got euro dependent ones, but they mostly revolve around the US dollar. There's also a number of indices that you can trade in the CFD platform. For example, here you've got the S&P 500, the Nasdaq, FTSE 100, the German market and the Euro Stock 50. You can also trade CFDs in individual companies. And if you use leverage, you could stand to make more money if you correctly predict the price movement. One of the good things about Trading 212 is that they do offer a practice account in the CFD space as well as the other user spaces. Now, if you were deciding to step into the world of CFDs, I would strongly recommend using this practice account before you ever risked your real money. Now, what I'm going to do over the next few weeks is begin to use this CFD practice account. And this isn't because I want to step into the world of CFDs in the future at all. It's merely because I want to see how challenging it is and show you how much money you could actually risk and lose by not fully understanding what you're doing. Now, I understand a little bit about CFDs, but not a massive amount by any means. So it's going to be an interesting experiment for me to see how this actually goes. And bearing in mind, some people actually do put their life savings into CFD trading before they fully understand what they're doing. I'm hoping that by doing this series over the next few weeks, if you are thinking about investing in CFDs, it will show you how risky it could potentially be if you don't fully understand what you're doing. Now, I'm not saying don't invest in CFDs, because you can make a lot of money from them if you know what you're doing and if you buy and sell at the right time. However, as most of the websites say, up to 75 to 80% of people who invest through CFD platforms lose money. And in my point of view, that's a risk I'm not willing to take at the moment. There is lots to understand about CFDs, and in this video I've merely talked about buys, sells, spreads and a little bit about the Trading 212 CFD platform. However, on the positive side, Trading 212 do offer lots of different support and help videos to help you get into CFD trading and investing. So if you are interested in some further information in CFDs and you have Trading 212, have a look at some of their videos and playlists, because there's lots of useful information here which will help educate you and help prepare you for first using that practice account before stepping into the world of using your real money.
So that's about it on CFDs then. As I said at the beginning, personally I would steer well clear of them until you properly understand what they are, how they work, what leverage is, and fully understand the whole concept of CFD trading. If you get into it before fully understanding it, you really are risking all the capital that you put in. And as I've said, many of the websites have disclaimers at the beginning before signing up, saying that around 75 to 80% of people who invest in CFDs actually lose money. So what I'm going to do over the next few weeks is use Trading 212's CFD practice account to show you how dangerous it can be to trade CFDs without fully understanding the market. Now, this practice account starts with £50,000 in it, And what you'll probably see is its decrease over time, probably quite quickly, but it's going to show you kind of how dangerous it can be to get into CFDs without really understanding the market. And as I've said, lots of people do this and put lots of money into it and never get anything back out. So if you have found this video useful, please like and comment below and consider subscribing to the channel as we've just hit 200 subscribers. If you haven't used the Trading 212 app yet, why don't you give it a go and use my referral link down below to get yourself a free share worth up to £100 when you invest just £1 into the app. Also, if you fancy making yourself a bit of extra cash, why don't you try match betting, where I earn around £400 every single month, risk and tax free. Check it out in the link below. And with that said, remember to stay away from CFDs unless you fully understand what they are, how they work, and understand the risks. And with that said, I'll catch you in the next one.